All right, so you know how the crypto market sometimes feels like it's got its own crazy heartbeat, like sometimes it's racing and sometimes it's barely there?
Yeah,
Well,
totally.
that's exactly what we're diving into today, uh, the wild world of cryptocurrency market cycles.
Yeah. And I think a lot of people think it's just random ups and downs, right? But
Yeah.
there's kind of a flow to it.
Yeah. It's not totally random, is it?
Not totally random. Yeah. There's rhyme and reason.
So how do we make sense of it all? What are we looking at today?
Well, for this deep dive, we've got some really interesting research, and we're going to look at how psychology plays a huge role.
Okay.
So we've got frameworks from places like Kanga University, and we'll examine the whole Bitcoin versus altcoin thing,
Oh, yeah, how they play together.
Yeah,
All
exactly,
right.
the relationship there. And plus, we're going to dig into those historical price movements, see if those charts can give us any clues about the future.
Okay, I like it. So it's like we're time travelers trying to predict the future of crypto.
Yeah, something like that,
But really, though, it's about understanding what makes these cycles tick.
for sure.
What's our mission today?
Well, our mission is to try to understand those forces at play, the emotional ones and the economic ones.
Okay.
We want to see how Bitcoin's doing relative to the rest of the market, like you said, and explore whether things like Bitcoin dominance can give us a clearer picture.
Yeah. Could those really tell us anything? I'm skeptical, but I'm open-minded.
Yeah, well, we'll see what the data says, right?
Exactly. Data-driven skepticism. I like it.
So to start things off, I think we need to establish a solid foundation here.
Okay.
And a lot of sources we're looking at, like SHIB Daily and Ledger, they all agree on these 4 key stages that crypto cycles tend to go through.
Okay. Lay it on me.
All right, so we've got accumulation first, then comes the rise or markup phase.
Okay.
Then we hit distribution, and finally decline or markdown.
Got it. Accumulation, rise, distribution, decline. All right. So like the circle of crypto life.
Exactly.
So let's break it down, starting with accumulation. What does that even mean?
So think of it this way. It's the quiet before the storm prices are low.
Okay.
And the smart money, the long-term investors, they start stacking those sats,
Accumulating.
Exactly, accumulating. It's not flashy. There's not a lot of hype yet.
Right. It's under the radar.
Yeah. And that's why it can be tricky to spot. So what signs should we be looking for to see if we're actually in this phase?
That's the million-dollar question, right? Yeah. I mean, what does it look like on the charts?
Yeah, so you might see pretty stable prices after a big drop, maybe some sideways movement.
Okay.
And the volume of trading might be low too, suggesting that most people aren't really paying attention.
Interesting. So it's quiet, but there might be some big players moving in.
Yeah, exactly.
Yeah.
You might see those larger buys happening without causing a huge price jump.
So it's a time for rebuilding confidence after maybe a rough patch.
Yeah, you could say that.
All right, so then things start to heat up. We enter the rise or the markup phase.
But that's when things get exciting.
All right, this is where we see the headlines.
Yeah.
Bitcoin's going to the moon. Everyone's talking about it.
Yeah, and that's where FOMO kicks in, right?
Oh, yeah. Big time fear of missing out.
Everyone's afraid of being left behind.
Why is that feeling so strong in the crypto world, do you think?
Well, I think it's a few things. First, you've got the volatility,
Oh, yeah, it's wild.
Prices can move so fast that the fear of missing out on those quick gains is amplified.
Right, because you could 10x your money in a week, theoretically.
Exactly. And then you've got this 24/7 market. The news is constantly coming at you. Social media is buzzing. It creates this sense of urgency.
It's like you always have to be plugged in.
Yeah, and it feels like everyone else is getting rich except you.
I've been there feeling that FOMO. It's intense.
So all that buying fueled by FOMO pushes prices even higher. And then what happens?
Well, eventually the party has to end, right?
Yeah, eventually we enter the distribution phase.
Okay, so this sounds a bit more strategic, like the big players are cashing out.
Yeah, you could say that the investors who bought in early, they start taking profits, And this selling pressure can slow down the price increases and even lead to a plateau.
Right, so it's like a subtle shift. The music's still playing, but people are starting to head for the exits.
Yeah, and what's tricky is that the overall sentiment might still be positive at this point.
Oh, so people are still jumping in even though the smart money's already on its way out?
Exactly. They don't realize the tide is turning.
Interesting. So it's all about recognizing those subtle signs.
For sure.
Okay, so then what happens? The music stops and the lights come on.
Yeah, then the decline or the markdown phase hits, and this is where it can get ugly.
Right, the hangover after the crypto party.
Yeah, prices start falling, and that's when FUD takes over fear, uncertainty, and doubt.
Oh, FUD. Everyone's talking about it. What's the big deal with FUD?
Well, it creates this negative feedback loop, you see. As prices drop, the news gets negative rumors start spreading.
Right, it's like a self-fulfilling prophecy.
Exactly. People panic, they start selling, which pushes prices down even further, and it just spirals.
So it's like FOMO on the way up and FUD on the way down. These emotions are so powerful.
Yeah, and Carminga University really emphasizes this. They say market sentiment, that overall feeling of investors is a huge driver.
Right, so positive sentiment leads to bull runs and negative sentiment leads to bear markets.
It's like we're not always making rational decisions, you know.
It's all about emotions.
Fear and greed, they drive the market.
So how does this connect to the whole field of behavioral finance? What are some other interesting frameworks we can apply here?
Well, one that comes to mind is the efficient market hypothesis, or EMH.
Okay, what's that all about?
So it basically says that all available information is already reflected in asset prices, making it impossible to consistently beat the market.
So you can't really outsmart the market.
Well, that's what EMH suggests. There are different forms of it, too.
Like what?
Well, there's weak form, which says you can't use past price data to predict future prices. Then there's semi-strong form, which says even publicly available news won't give you an edge. And then there's strong form, which claims even insider information won't help.
Wow. So basically, no matter what you do, you can't win.
Well, that's the theory. But given how crazy the crypto market is, do you think EMH really holds up here?
I don't know. It doesn't really feel like it does it.
Yeah, I mean, look at how prices swing on news and rumors. It doesn't seem super efficient.
Right. It's like emotions are overriding logic.
Exactly. And that's where behavioral finance comes in. It tries to explain why markets might not always be efficient.
Okay, so what are some of those explanations?
Well, one key concept is overreaction.
Okay, what's that?
So you see prices sometimes go way beyond what fundamentals would suggest, driven by momentum and herd behavior.
So everyone's piling in, pushing prices up.
Exactly. And then later it corrects, often pretty sharply. Remember the 2017-2018 Bitcoin boom and bust.
Oh yeah, that was a wild ride.
It's a classic example of overreaction, initial excitement, then FOMO takes over, leading to a huge surge, and then bam, reality sets in and the bubble bursts.
Ouch. Yeah, that hurt a lot of people.
And then there are these cognitive biases that we're all susceptible to.
Oh yeah, like what?
Well, there's the gambler's fallacy, for example.
Okay, I've heard of that. What is it again?
It's that feeling that if something's happened a lot recently, the opposite is bound to happen next.
So like if a coin's been pumping for days, you think it's due for a correction?
Exactly. Or the hot hand fallacy, which is the opposite. You think a winning streak will continue.
So if you've had a few good trades, you feel like you can't lose.
Precisely. And both of these stem from misinterpreting small samples of data.
So it's like we're trying to find patterns where there aren't any.
Yeah, our brains are wired to look for patterns even when they're not there.
And this can be really dangerous in crypto, can't it?
Absolutely. Shib Daily points out that recognizing these biases is so important for avoiding those emotional trades that can really wreck your portfolio.
Right, because when emotions take over, logic goes out the window.
Exactly.
Okay, let's switch gears a bit and talk about Bitcoin dominance and altcoin season.
Yeah, those are two key concepts to understand.
So they're kind of two sides of the same coin, right?
Exactly. They can give us clues about where the market's attention is going.
And where the money's flowing.
Right. So Bitcoin dominance is basically how much of the total crypto market cap is made up of Bitcoin.
Okay, so like if Bitcoin's market cap is half of the total crypto market cap, then its dominance is 50%.
Exactly. And what's really interesting is how this number can be a measure of market sentiment.
Oh, okay. So what does it tell us?
Well, when Bitcoin dominance is high, it can suggest that investors are feeling risk averse, you know?
So they're sticking with the OG, the safe haven.
Exactly. But when it's lower, it might mean that people are more willing to take risks.
And chase those altcoin gains.
Precisely.
So what causes Bitcoin dominance to go up and down?
Well, there are a lot of factors at play.
Like what?
Well, for example, the emergence of new blockchain technologies that are really innovative.
Right, something that could be a Bitcoin killer.
Yeah, or maybe it's just something that captures the imagination.
So people start pouring money into it.
Exactly. And if those altcoins outperform Bitcoin during a rally, that could also cause Bitcoin dominance to drop.
Okay.
And then you've got market corrections. Those could have an impact too.
How so?
Well, sometimes when things get shaky, investors flock back to Bitcoin.
Like it's a safe haven in a storm.
Exactly.
So Bitcoin dominance goes up.
Yeah, and there are other things too, like hard forks, you know.
Those big upgrades.
Yeah, and regulatory changes that can spook the market. And of course, overall investor confidence in the whole crypto space.
Right, so it's this whole complex interplay of factors.
Yeah, the comprehensive guide to Bitcoin dominance really emphasizes that it's a constantly changing landscape.
Now let's talk about the fun stuff. Altcoin season.
Ah, yes, the time when those altcoins really pump.
This is what everyone's waiting for,
A
right?
lot of people are. Yeah, it's that period when a bunch of altcoins see significant price surges.
Okay, and when does this usually happen?
Well, our sources like Altcoin and Tangem say it often happens when Bitcoin dominance starts to decline.
So money's flowing out of Bitcoin and into altcoins.
Exactly. Or it can happen when Bitcoin's price stabilizes after a big run.
So it's like the energy is spreading out across the market.
Yeah, that's a good way to put it.
And there's this inverse relationship between Bitcoin dominance and Altseason, right?
Yeah, that's key to understand. As money moves from Bitcoin to altcoins, Bitcoin's share of the market naturally goes down.
Right, makes sense.
Like in 2022, Bitcoin dominance dropped pretty significantly,
By how much?
from around 65% down to about 40% according to Altcoin season.
Wow, that's a big drop.
Yeah, altcoins were definitely having a moment.
So how do we know when an altcoin season is happening?
Well, there's this thing called the Altcoin Season Index.
Okay, what's that?
It basically looks at how the top 50 altcoins have been performing compared to Bitcoin over the past 3 months.
So if most of them are outperforming Bitcoin, it's a sign of alt season.
Yeah, if 75% of them are doing better than Bitcoin, that's generally considered a good indicator.
Okay, but there's a catch, right?
Yeah, Tangem points out that this index is often reacting to what's already happened.
So it's not very predictive.
Yeah, it's more like a confirmation that alt season is already underway.
So what are some earlier clues we can look for?
Well, we've talked about that sustained decrease in Bitcoin dominance. That's a big one.
Yeah.
You also want to look for a surge in trading volume specifically for altcoins.
Right. People are getting excited about something.
Exactly. And the overall sentiment in the market should be positive, you know?
So lots of hype and optimism.
Yeah. And then there are technical analysis indicators that some people look at.
Oh, yeah, like those chart patterns?
Exactly. And of course, news and events can play a role too.
Like what kind of news?
Well, positive regulatory developments, for example,
Okay.
or the launch of a promising new project.
So something that gets people excited.
Yeah, and Tangem mentions that a sustained drop in Bitcoin dominance below 54% is often a sign that alt season is brewing.
Okay. So it's all about watching those signals.
Yeah, and we've seen some pretty epic alt seasons in the past.
Like what?
Well, back in 2017, 2018, during the ICO boom, Bitcoin dominance absolutely tanked.
Really?
Yeah, it went from over 86% down to below 39%.
Wow, that's insane.
Yeah, everyone was chasing those ICO gains.
And then what about more recently?
Well, in 2021, we had another big one.
What was driving that one?
Well, it was a combination of things. You know, the pandemic was happening.
Right.
And then you had the rise of meme coins like Dogecoin and Shiba Inu.
Oh, yeah. Those were crazy times.
And the NFT craze was kicking off
It
too.
was like a perfect storm.
Yeah. And Bitcoin dominance dropped from 70% to around 38% during that time.
So altcoins were going wild.
Yeah. The Altcoin Season Index was at a really high level, according to Tangem.
So how long do these alt seasons usually last?
Well, Altcoin Season says it varies quite a bit. It can be anywhere from a few weeks to several months.
Okay, so there's no set time frame.
No, it depends on the overall market cycle, you know?
Right.
And what the news is doing, how investors are behaving, and how quickly those underlying technologies are being adopted.
So it's all connected?
Everything's connected in crypto.
Okay, let's shift gears again and talk about history.
Yeah, because they say history doesn't repeat, but it often rhymes, right?
Yeah, so what can we learn from looking at past crypto market cycles? Can it really tell us anything about the future?
Well, CoinMetro and other sources on crypto market cycles say that analyzing historical price action and market behavior can definitely offer some valuable insights.
Oh, okay.
But it's not a crystal ball, you know?
It's not a guarantee.
Exactly. But it can give us some clues. So we've seen a few distinct major cycles since Bitcoin was born back in 2009.
And they all follow the same pattern.
Yeah, pretty much. CoinMetro breaks them down into those 4 familiar phases: accumulation, uptrend, peak, and correction.
So it's like a cycle within a cycle.
Yeah, you could say that.
And then there's this really interesting recurring event, the Bitcoin halving.
Yeah, that's a big one.
So remind me, what's a halving again?
It's basically a programmed reduction in the reward for mining new Bitcoin.
Okay.
It happens roughly every 4 years.
And this has a big impact on the market, right?
Yeah, historically it has Chiron Labs and a report called Examining the 2024 Bitcoin Halving Effect. Both say that halvings have acted as a catalyst for bull markets.
So it's like a shot of adrenaline for Bitcoin.
Yeah, because it reduces the rate at which new Bitcoin is created.
Supply and demand, right? Less supply, same demand, price goes up.
Exactly. And we saw this play out after the halvings in 2012, 2016, and 2020.
So the price went up significantly after each halving.
Yeah, and then we had the most recent one on April 2024.
Oh, yeah. What happened there?
Well, that report, examining the 2024 Bitcoin halving effect, gives us a pretty detailed breakdown.
Okay.
Leading up to the halving, Bitcoin's price was all over the place.
Yeah,
Lots of volatility. It actually reached a peak before the halving even happened.
Oh, interesting. So it didn't follow the usual pattern.
Yeah, that was different from previous cycles where the big price surge usually happened after the halving.
So what happened after the halving in 2024?
Well, there were some ups and downs, but then later in the year, Bitcoin's price really took off.
So maybe the halving effect was delayed.
Maybe, or maybe other factors were at play,
Like what?
Well, that report mentions increasing adoption of Bitcoin ETFs and the overall supply and demand dynamics.
Right.
And Goldman Sachs did an analysis that suggested these factors were really important in this cycle.
So it's not just about the halving anymore.
Exactly. It's more complex than that now.
So with all this in mind, how do we navigate these cycles and maybe even profit from them?
Well, Altcoin Season says monitoring Bitcoin dominance, and that Altcoin Season Index is a good starting point.
Yeah.
And don't forget about those underlying drivers we talked about.
You mean investor sentiment, all those emotions?
Fear and greed, regulatory changes, institutional involvement, all that stuff.
It's a lot to keep track of.
Yeah, it can be overwhelming.
So what are some practical strategies for navigating these markets?
Well, Ship Daily has some good advice for bull markets.
Like when the market's going up?
Yeah, they say it's important to take profits along the way.
Don't get greedy.
Exactly, and be really careful not to get caught up in the FOMO.
Right, because that can lead to bad decisions.
For sure, and then when the market's in a downturn,
Bear market time.
yeah, they recommend holding strong assets, maybe using dollar cost averaging,
Okay.
and most importantly, staying patient.
Ride it out.
Exactly.
So what about altcoin season? Any tips for making the most of that?
Well, Altcoin Season says preparation is key.
Okay, what does that mean?
It means doing your research, understanding the different altcoins, their technology, their use cases, their potential for growth.
So it's not just about buying the hype.
No, you got to know what you're investing in.
And you should be watching those market indicators, right?
Absolutely. Bitcoin dominance, the Altcoin Season Index, the overall market cap of altcoins.
Right.
And it's a good idea to have a diversified portfolio.
Don't put all your eggs in one basket.
Exactly.
So what are some common mistakes people make during altcoin season?
Oh, there are a lot of traps out there.
Like what?
Well, the biggest one is probably FOMO,
Getting caught up in the hype?
Yeah, buying without doing your research.
So you're just buying what everyone else is buying.
Exactly, and then people often overlook transaction costs.
Oh, yeah, those can add up.
And they don't always prioritize security.
Right, you got to keep your crypto safe.
For sure. And then there's failing to diversify, neglecting market signals, not having a plan,
So many ways to mess up.
Yeah, it's easy to get caught up in the excitement and make mistakes.
And we should probably emphasize that altcoins are way more volatile than Bitcoin.
Yeah, definitely Tangem and other sources really stress that.
So higher potential rewards, but also higher risks.
Exactly. You got to be comfortable with the volatility and only invest what you can afford to lose.
Words to live by in the crypto world.
Absolutely.
All right, so to wrap it all up, the crypto market moves in cycles driven by our emotions and economics.
Yeah, it's this fascinating interplay.
We've got Bitcoin dominance and altcoin season. These are key concepts to understand.
They can really give us some clues about where the market's headed.
And historical patterns can provide some perspective, but they're not guarantees.
No past performance is not indicative of future results.
Exactly. So the key takeaway here is knowledge is power.
Yeah, understanding these dynamics can help you make better decisions.
And don't forget to do your own research.
Always do your own research.
And be aware of your own emotional biases.
Yeah, because fear and greed can lead you astray.
So here's a final thought to leave you with. As the crypto landscape evolves with more institutional involvement and new regulations, how might these traditional market cycles change?
Yeah, that's a good question.
Could we see completely new patterns emerge?
It's possible.
And what new metrics might become important for understanding market sentiment and the balance between Bitcoin and altcoins?
Yeah, it's a fascinating area to explore.
Definitely. Thanks for taking this deep dive with us.
My pleasure.
We'll see you next time.
See ya.
Bye.